Good morning, students. I am Dr. Manavati, Assistant Professor. So, students, in today's class, we are going to discuss about factoring, leasing, hire purchase. First, let us concentrate on the meaning of lease financing. Then, we will concentrate on the different types of lease financing. After that, we will discuss about the advantages and disadvantages of lease financing. Then finally, we will discuss about the higher price and what are the differences between these lease financing as well as higher price. This is the order. In this order only, we are going to discuss in today's class, right? Say, assets are defined as anything of monetary value that is owned by a firm or an individual. Assets listed on a firm's balance sheet can include tangible items such as inventories, equipment, and real estate, as well as intangible items such as property rights or goodwill. Leases differ from term lending in that the leasee does not have ownership rights to the asset. At the end of the lease contract, the leasee usually has the choice of extending the lease, returning the asset, or introducing a buyer for the asset. Some leases are entitled to a refund of 95% of the sale proceeds when they introduce a buyer. So the refund amount will depend on the contract between the original leaser and the leasee. HP is a financing solution suitable for businesses wishing to purchase assets without paying the full value immediately. The customer pays an initial deposit with the remainder of the balance and interest paid over a period of time. On completion, ownership of the asset transfers to the customer. It is important to note that the accounting and tax treatment of leases varies according to the type of lease it is. For example, as a finance lease is accounted for as a loan funding the asset. The tax treatment follows the legal form of the transaction, which is the hiring of an asset. More specifically, the treatment of capital allowances differs and tax treatment should be taken into consideration when deciding how to finance an asset purchase. The use of HP or leasing is particularly common in industries where expensive machinery is required, such as construction, manufacturing, plant hire, printing, road fleet, and transport, engineering, and professional services. So it is also used to finance other capital requirements of the business. For example, the smaller items, cars, photocopies, as well as the asset providers usually dictates this type of linked finance. So let us discuss about the lease financing. See, lease financing is one of the important sources of medium and long-term financing, where the owner of an asset gives another person the right to use that asset against periodical payments. The owner of the asset is known as leaser and the user is called a leasee. The periodical payment made by the leasee to a leaser is known as a lease rental. Under lease financing, the leasee is given the right to use the asset, but the ownership lies with the leaser and at the end of the lease contract. The asset is returned to the leaser or an option is given to the leasee either to purchase the asset or to renew the lease agreement. A leasing company buys and owns the equipment, which the business then rents for a predetermined period. So typically, The leasee will have a set of interest rate which fixes the outgoings on the assets. The business also has the option to replace or update the equipment at the end of the lease period. Then let us concentrate on the different types of lease financing. Finance lease. It is the lease where the leaser transfers substantially all the rights and rewards of ownership of assets to the lessee for lease rentals. So, in other words, it puts the lessee in the same condition as this person would have been if they had purchased the asset. Finance lease has two different phases. One is the primary period. It means this is a non-cancelable period. And in this period, the leaser covers his total investment through lease rental. The primary period may last for indefinite period of time. The lease rental for the secondary period is much smaller than that of primary period. Now let us concentrate on the features of finance lease. A finance lease is a device that gives the lessee a right to use an asset. The lease rental charged by the leaser during the primary period of lease is sufficient to recover his or her investment. The lessee rental for the secondary period is much smaller, that is often known as peppercorn rental. Lessee is responsible for the maintenance of assets. No asset-based risk as well as rewards is taken by leaser. So such type of lease is non-cancelable. The leaser investment is assured also. Now let us concentrate on this operating lease. See, operating lease is concerned, lease other than finance lease is called operating lease. So here risk as well as rewards incidental to the ownership of assets are not at all transferred by the leaser to the lessee. The term of such lease is much less than the economic life of the asset, and therefore the total investment of the leaser is not recovered through lease rental during the primary period of lease. In case of operating lease, the leaser usually provides advice to the leaser for repair, maintenance, and technical know-how of the leased asset, and that's why this type of lease is also known as service lease. Now let us concentrate on the features of operating lease. The operating lease has some important features. Let us concentrate on one by one. The first feature is the lease term is much lower than the economic life of the asset. Second one, the lessee has the right to terminate the lease by giving a short notice and no penalty is charged for that. The leaser provides the technical know-how of the lessee asset of the lessee. Then the next one is the risk and rewards incidental to the ownership of assets are borne by the leaser. The last one is this leaser has to depend on leasing of an asset to different lessee for recovery of his or her investment. Then let us concentrate on the advantages and disadvantages of lease financing. See, at present, leasing activity shows an increasing trend. Leasing appears to be a cost-effective alternative for using an asset. So, however, it has a certain disadvantage and advantages also. First, let us focus on the advantages. The first advantage is assured regular income. So, this leaser gets lease rental by leasing an asset during the period of lease which is an assured and regular income. Then the second advantage is preservation of ownership. Third one is benefits of tax. Fourth one is high profitability. Next one, high potentiality of growth. Then the next one is the recovery of investment. And another one is use of capital. It is very cheaper also. Then here technical assistance is the next advantage. Inflation friendly and ownership. These are the main advantages in this. And at the same time, this lease financing has some disadvantage also. The first disadvantage is unprofitable in case of inflation. Next disadvantage is double taxation. Third one is sales tax may be charged twice. Next one is greater chance of damage of asset. At the same time, it is compulsion also. Compulsion, ownership, it is very costly. Understatement of asset, these are the main disadvantage in this finance. Now we will discuss about the hire purchase. The hire purchase is an arrangement for buying expensive consumer goods where the buyer makes an initial down payment and pays the balance plus the interest in installments. So the term hire purchase is commonly used in the United Kingdom and is more commonly known as installment plan in the United States. However, there can be a difference between the two. With some installment plans, the buyers get the ownership rights as soon as the contract is signed with the seller. With the hire purchase agreement, the ownership of the merchandise is not officially transferred to the buyer until all the payments have been made. If the business wants to own the equipment at the end of the agreement, but avoid the cash flow impact of buying outright, then hire purchase is an option. So a finance company buys the equipment and the business repays the cash price plus interest through regular repayments. So these agreements are also normally at a fixed interest rate. Thank you, friends.